Good afternoon, everyone. My name is Richie Merzian. I head up the Clean Energy Investor Group, and I'm delighted to be running through the results of our 2026 Clean Energy Outlook, which is the third annual survey of members of the CEIG, outlining what are the challenges in terms of the renewable energy rollout and how do we address them. This is our latest report, which we put out a couple of weeks ago in partnership on the research with Oxford Economics and with our principal sponsor, Gamuda. But before we get into any of the content, I'd first like to acknowledge the traditional custodians on whose land we're all on. I'm dialing in from the lands of the Ngunnawal people here in the capital. I want to pay my respect to their elders, past, present, and those to come, and extend that respect to any First Nations people who are with us on the call today. For those unfamiliar with the Clean Energy Investor Group, we're a boutique industry body. We represent the majority of investors, both domestic and global, who are building out the clean energy right across the country with 18 gigawatts installed, around 150 gigawatts in the pipeline, and a portfolio value of just over 40 billion. These are our members, and for any renewable energy investors and developers who are joining us here on the call and would like to know more, please do reach out. So we will run through the key findings of the report, which break down into a number of categories on Australia's attractiveness, on how it's looking state by state, and then some new questions that we've asked. We have a lot to go through, so we might not have time for questions at the end. However, do put your questions in the chat, and if we can get to them during this session, we will. If we don't end up getting to them, we're happy to take them offline as well. This survey started in 2024 as an internal assessment amongst our membership of what are the key challenges that's interrupting the transition to clean energy. What is stopping those dollars from turning into electrons? Last year, we found, given the broader interest in these challenges, that we would make this report public and make it an annual benchmark report. This year, we took it a next level up, working with a research partner, Oxford Economics, to be able to dive into the analysis in a deeper fashion, and also working with the principal sponsor, Gamuda, to get this publication right out there in the world. So really excited to be talking to and delivering this report. As a result of taking this report next level, we ensured that it had a good run in the broader conversation. We believe this is more than a survey. This is a broader input into the public debate around how we turn Australia into clean energy superpower. And so you might have seen this report right across the News Corp papers, the Fairfax papers, the ABC, a number of industry publications, Bloomberg, and many other spots. And if you haven't dived into it, my colleagues will pop a link into the chat. If we really boil this down into key findings, the first is that confidence is slipping. There was a clean energy high in 2024 with a number of projects closing, but since then, the challenges have been increasing. And we'll dive into what those challenges look like. There are some emerging opportunities on the horizon, some we didn't see forthcoming in earlier reports. And so there are some green shoots, but overall, the landscape has been getting harder and harder. So what does that actually look like? Well, 77% of our members of Australia's largest clean energy investors and developers are saying that the investment landscape has deteriorated over the last 12 months. This report was conducted in May this year, and so it usually happens about the same time every year. So we're saying in the last 12 months up until May, things have progressed, but according to the majority of our members, that they've worsened. And when you ask about Australia's attractiveness as a destination for clean energy investment, and this is a polling question we've asked before, it has slipped by about 11 points. This is important because the majority of Australia's investors in large-scale wind solar batteries come from overseas. According to our analysis, around 75% of the investment over the last 6 or 7 years has come from international investors, and Australia's attractiveness as a destination for those global investors who have an opportunity to invest anywhere across the world has dropped from 69% to 58%. So right now it is really just trailing a little bit over that halfway mark, which is a concern. And just to mention as well, this is not happening in a bubble. There is a broader shift that we're seeing around the impetus, the diplomatic pressure to address climate change and to invest in clean energy, to factor in ESG. Like, this is part of a global shift. We've seen this as well in terms of costs, supply costs, capital costs for some of the clean energy developments. But when you ask about Australia as a standalone nation, it has dropped in terms of an attractive location. On the question of the federal government's target of reaching 82% renewable energy by 2030 in the NEM, now 1 in 10 investors say, or less than 1 in 10 investors say that it is likely that Australia will meet that target. The majority think that that target is out of reach. When we asked to add additional detail as to why that is, there are a number of reasons given, and you'll see this reflected later on in our challenges, but issues around the implementation of the capacity investment scheme, the flagship federal government program to reach that 82% target, those problems persist. The delays in transmission, the deterioration in bipartisan support for Australia's net zero goals, issues around having locked in closure times for coal-fired power stations, and broader issues around coordination, streamlining approvals, and costs as well. So what do those challenges look like and how are they actually ranking? Transmission tops the list. Last year, we had a tie between transmission and planning, but transmission continues to persist and tops the list this year in terms of the delays in building out and connecting up, whether it's renewable energy zones or some of the huge opportunities we have in developing out our renewable assets. Number 2 continues to be planning approvals, and we'll break that down state by state further in the results, but it continues to be a problem, and that's followed by curtailment, grid access and congestion, as well as a lack of PPAs, a lack of offtakes in the market as well. Environmental assessments rounds out some of those top concerns. It was the number 1 concern in 2024. Since then, we've seen improvements. We've seen the federal government's major EPBC reforms take place last year, and this year they've rolled out draft standards. They are looking at bringing forward regulations, and today the CEIG has put out a new report around what we believe are key elements of a new EPBC regime that will actually lead to a practical and effective process that will help deliver on our renewable energy proposals. And so my colleagues will pop a link into that new EPBC report that we pulled together, drawing on the advice of Herbert Smith Freehills Kramer, and hopefully we can continue to improve on the EPBC process and drop this challenge further down the list. A new challenge we put into the mix this year was tax treatment. This reflects the federal government's draft bill, which was introduced to Parliament, I think, just last month. This will bring a new tax on international investors when they go to sell their clean energy assets. This is a major concern for members. Over half of investors rated this as a significant challenge. More than a quarter ranked it as a top 4 challenge. We want to see the tax treatment for international investors remain competitive and on par with local investors, and we will continue to advocate for that. So if you're interested in those CGT changes, please do get in touch. This is a top priority for the CEIG. In terms of what those solutions look like over the next 3 years, the No surprise, the top opportunity is actually just building our transmission out at speed and scale. That's been a continual bugbear. We are seeing some green shoots in terms of some transmission projects getting closer to being built and operating. But what we wanted to draw your attention to was the second highest opportunity, which is getting core closure certainty. Whether it's Queensland, New South Wales, or Victoria, the three biggest states, core closure continually is raised. We have ambiguity whether it's the state-owned assets in Queensland or whether it's extensions out in New South Wales and Victoria. The absence of hard deadlines for the closure of coal continues to interrupt the price signals that we need to bring on board the large-scale renewables that we want. And so having that addressed, and that'll require a whole suite of reforms and energy and coordination that we currently don't have right now, but that is key. Rounding out the top three is streamlining planning and environmental approvals, and we'll go into that in the state-by-state breakdown. Finally, there are some other opportunities: carbon taxes, renewable energy targets, increased funding for schemes like the CIS and the new regime post-2027 following the NEM review. But those are sort of further down the list. And for some of them, like a carbon tax, will require a lot more work. When it comes to a state-by-state breakdown, New South Wales retains its top spot as the most attractive state for clean energy investment, and Queensland holds on to the second spot. When we first ran this report in 2024, Queensland topped the list. It has slipped and it's retained that second spot. The biggest mover, however, was WA, which jumped up 2 spots to now take third place, the bronze position. And that's interesting to note. We've seen a growing amount of interest to invest out west. We've seen the government roll forward a number of new policies and plans, and we'll break that down state by state. The losers, if you want to do a budget style winners and losers, we've seen Victoria and South Australia each drop a spot as well, and we'll dive into that further on. On New South Wales, this is a picture from a roundtable that the CEIG hosted with our members and the New South Wales Treasurer, Daniel Mookie. And following that, the New South Wales Treasurer released some of the budget papers and analysis and showed that one of the key factors keeping the New South Wales economy afloat is renewable energy investment. And what we've seen over the last couple of years is improvements to the New South Wales planning system. We've seen the introduction of new agencies like the Investment Delivery Authority and the DCA. We've seen basically incremental improvements. So despite New South Wales still taking the longest to get a planning approval, despite New South Wales having the most expensive DA fees across the country by far, it is overall ranked as the best, and we are seeing some improvements across the line in New South Wales. We'll continue to work at it. As you can see on the slide, there are still a number of challenges in working in New South Wales. And earlier this year, the CEIG with HSFK put out its recommendations for the next wave of reform they would like to see in the New South Wales planning process. My colleagues will pop a link of that report into the chat. And we are seeing the appetite from the New South Wales government to entertain that, including this prioritising renewable energy bill that's currently being debated in New South Wales Parliament that we would like to see approved. So if you want to dive into any of those details, check out the New South Wales planning report that's in the chat, or get in touch as well. On Queensland, the number one concern that is weighing Queensland down is energy policy uncertainty. 6 out of 10 investors said that this was the key concern. We continually find that Queensland is quite a divisive state. There are a number of investors who understand the Queensland landscape, who have projects and do want to see them through, and are continuing to work through Queensland and do rate it. And there are others who have seen the recent changes to the planning process, who have seen projects being called in and canned, and are now wary of doing further business in Queensland. We would like to see Queensland continue to be an attractive destination and maybe even take that top spot again, but it will require more work. And one of the steps that we're taking is we're partnering with the Queensland Renewable Energy Council on an investor forum. That's taking place on the 13th of August in Brisbane. My colleagues will pop a link into that registration in the chat. But we do see this as a key opportunity, and we will have CEIG member QIC presenting on the investor gateway, because we do believe that there is more that can be done in Queensland to improve that uncertainty that's come out of the last couple of years, as well as how to work with government-owned corporations now who have changed some of the PPAs and the offtakes that they were providing in terms of what it means for the coal assets that are continuing on as well. So Queensland has a bit more work to do, but we do encourage members to join us at that investor forum on how to help land projects in Queensland. On WA, this has been one of the key stories coming out of our survey. There is a greater interest in working in WA. We've seen the government play a greater role in rolling out the transmission plan, in deepening the market, including through its offtakes, through its government-owned corporations. There are some opportunities for WA to further attract investment. One of those suggested by members is actually having more policies and targets that they can bring forward, including a renewable energy target, which is noticeably absent. So we'll be doing a bit more work in WA as the CEIG, including reaching out and taking a delegation of members over to meet with the government there. If you'd like to be involved, please do reach out to my colleague Connor. His details are listed in the slide, and we'll also pop that up in the chat as well. There are opportunities to deepen the market. There are opportunities to continue WA's ascension and interest as an attractive place to do business. Victoria did slip down the list now to 4th place. We are seeing concerns, particularly with the Victorian access regime. A number of members have raised this with the transmission build-out delays, despite the good work of VicGrid over the years to try and address that, and with curtailment and negative pricing, particularly for a number of assets that have been in the market for a while, up in the northwest. There is also the shadow of coal power station uncertainty, and what will happen with the Victorian election later this year. The CEIG were presenting this report at the Wind Energy Summit. I think it was earlier this month, or maybe even last month, and that's my colleague who's just joined us here at the CEIG, Nicholas Aberley, presenting on that. We would like to see Victoria build out on its ambitions and deliver on its ambitious renewable energy target, but a lot more work will be required. So we are doing more work later this year in Victoria. Do reach out if you'd like to be involved. We didn't have a slide on South Australia, but I will mention that we will be involved in the Adelaide Climate Action Week next week. And on Friday, we'll be working with our partner WinLab on an event on South Australia. South Australia is on a track to hit 100% clean energy next year, net, and that's an exciting and world-leading goal, and we want to be part of South Australia's journey as it goes beyond 100%. So my colleagues will pop a link in the chat, but do join us if you are in Adelaide late next week. One of the new questions that we put into the mix was around data centers. There's been a lot of talk around the role that data centers should play, the requirements they should have on their energy, on their energy procurement. Overall, members see data centers as a net benefit, whether that's half of members seeing it as strongly positive or most of the rest seeing it as somewhat positive. Clean energy investors and developers see data centers as providing a much needed demand load from the corporate sector at a time when we do see quite a thin market for offtakes. Having said that, though, there is a need for more coordination. There is a need for ensuring that there is good matching between the demand needed and the locations and the clean energy that we can provide as well. And so we are going to be doing a lot more work around how to take advantage of the new opportunities that data centers present to ensure that we can back in the clean energy projects that are already in the pipeline and demand further. With that, I would like to invite our principal sponsor, Gamuda, and Jared Hardman, the Chief Development Officer at Gamuda, to say a few words as well.
Thanks, Richie. Thanks for walking us through the report and providing some insights into the investment environment that we all work in. At Gamuda, our journey in Australia's energy transformation has just begun as a developer, builder and owner and an EPC contractor. As a part of that, we're constantly looking at what's happening in the investment environment, the planning approvals, etc. But in particular, I'd like to say, being a new member, we're excited to be a part of the conversation moving forward, and we look forward to being a part of the Clean Energy Investment Group. And we're pleased to have sponsored such a valuable report, which I think everybody can agree helps us all with our thinking moving forward. Thanks, Richie.
No worries, Jared, and it's great to have Gamuda on board, both as a principal sponsor and as our newest member at the CEIG as well. Look, to bring things to a close, some of the key findings and thoughts. If we are serious about this 2030 target, to hit 82% clean energy on the NEM, we're going to need a lot more coordination across federal government, the proper implementation of the flagship capacity investment scheme to ensure that the government is contracting projects that actually deliver, not just provide the cheapest price, and ensuring that any future scheme that comes out of the NEM review, namely the ESEM, can actually continue that investment beyond the 2030 mark as well. When it comes to the market itself, we need greater certainty around the revenue, and that comes with coal power station closure dates. Having hard retirement dates across the East Coast is key, and especially at a time when we're seeing the prices for offtakes not meet the price that's required to get some of these projects off the ground, particularly on wind, which has a greater and greater value as we move towards 100% penetration. And finally, where there are new opportunities like data centers, we need to make sure that we can coordinate and match that demand with supply. And we look forward to the government's recommendations or this new position that the Prime Minister announced. And we want to walk that line carefully to ensure that we both take advantage of this new opportunity, but also ensure that it creates further demand going forward. I think my colleagues have been monitoring the questions. I did see a hand pop up on the chat. We do have 1 or 2 minutes left for questions. If there are questions that people would like to ask direct, or if my colleagues have seen questions on the chat that they can bring my attention to. One of which was, what is the proportion of members? I think we had 82% of members fill out the survey, so solid majority. While we go through that, I'll just run through a couple of other things that we have in the pipeline. The EPBC recommendations and report that we launched today, we will be presenting in a dedicated webinar next month on the 11th of August. So please do join us to understand how we can take the high-level reforms from last year and bed them down into practical and efficient regulations that don't complicate and add further hoops to jump through, but actually simplify and assist in the assessment process under the EPBC, and also standardize some of the conditions and some of the requirements as well, so that we don't have these undue heavy burdens that will often render projects unviable. As mentioned, we will have the investor forum with our partner QREC, who are leading on that on the 13th of August. So do join us if you can find your way into Brisbane next month as well. And we have some online events, a Vic Grid briefing on the access regime, which was one of the top concerns for Victoria, our CEO member briefing. And for our members who are joining us, we will have a new event, which is a CEO lunch, which will be taking place on the 18th of September. So this will be a new opportunity for C-suite representatives of our membership to meet and discuss some of these key challenges in person in a Chatham House space. And that'll be taking place on the 18th of September. We also have our conference, which will be taking place at the same time and same location next year. Thank you to those who joined us this year at our sold out event. We're quite excited to be delivering this once again with HSFK. Do reach out for sponsorship opportunities and how to get involved. We only have one conference a year. It really does dive deep into many of these challenges we presented and how our membership are working towards addressing them. And so we do encourage you to get involved. It really is a fantastic event. And whilst we are a membership that's limited to clean energy investors and developers, we do have a corporate partnership. So if you are an EPC or a service provider, you want to get involved with the CEIG, do reach out. We have ways to work together. This is Alex Thompson, the co-founder of RenewMap, speaking at our conference, who was our first corporate partner to come on board. So do reach out. With that, if there are any questions, we do have 1 or 2 minutes left. So either raise your hand, or for any of my team monitoring the chat, feel free to jump in. Otherwise, to say that the utility of this report is that it ultimately shapes the work of the CEIG, but also answers that crucial question: what is stopping the renewable energy transition? We have seen a deterioration in conditions over the last couple of years, but there are opportunities to address that. The federal government has an appetite to deliver on that goal. We've seen that through its programs. We've seen that through the language of Minister Bowen, but more work will be required. And on issues like capital gains tax for international investors, we are going down the wrong direction there by bringing forward new taxes that will increase Australia's uncompetitiveness, make us less attractive. So we are working hard on addressing these. So if you want to get involved in any of these issues, or you want any more information, please check out our site, check out the links posted. And finally, a big thank you to my team who have made this report a reality. It's a major undertaking, and yeah, and I just wanted to recognize all the effort that went into that. You can see many of those team members on this chat now. And a particular thanks to Ness, who led this work this year, and Sydney, who led it last year as well. Great. Thanks again, everyone, for joining us. Thank you, Gamuda, as our sponsor. And hopefully that will help shape some of your thinking. And please do get in touch if there's anything more that we can do to work together.